Hello traders, good afternoon. My name is Tomasz Wiśniewski. I'm a chief analyst in Alpha Research and Analysis, and this is daily analytical report. It's Thanksgiving, so American traders will not work today, which should cause decreased volatility. But before they went for a longer weekend, for longer holidays, they traded FOMC minutes. FOMC minutes came more dovish than expected, and I will tell you a little bit about those minutes. Well, a few Fed officials opposed near-term hikes, which was mostly based by the slower, weaker inflation. Also, what they said is in light of elevated asset valuations and low inflation market volatility, several participants expressed concerns about a potential buildup of financial imbalances. They worried that a sharp reversal in asset prices could have damaging effects in the economy. Right, so that was overall perceived as dovish minutes. Some participants expressed concern that the persistently weak inflation data could lead to a decline in longer-term inflation expectations, or may have done so already. And using this knowledge, this data, FOMC minutes, traders were selling American dollar stocks. Well, I would say that stocks were virtually unchanged after FOMC minutes, but American dollar definitely suffered, and that's the most important event for the markets right now. So with the absence of Americans, let's look how the situation looks like in the calendar. We had the retail sales from New Zealand, and it came worse than expectations, but still New Zealand dollar is climbing higher. So that's the influence of the weaker American dollar. So even the worst data from New Zealand dollar didn't reverse the trend on New Zealand dollar to American dollar. Well, this short-term trend. Because the long-term trend actually reverses, which I will show you from when we will take a look from the technical point of view. In the absence of Americans, we do have a pack of data from Eurozone. So GDP from Germany, which came slightly worse than expectations. But apart from that, we got PMIs from Eurozone, from the biggest economies like from France and Germany, which came better than expected. And overall, PMIs for Eurozone came better than expected. These are very high numbers. We also had GDP from UK in line with expectations, but that data does not really matter because well, this influence from the American dollar, from the dovish FOMC minutes, is too big, and this is the main impulse for the markets. So PMIs, I would say that even if the PMIs would come worse than expected, that wouldn't change the sentiment. Obviously it helps now, but even worse data wouldn't change the sentiment against the American dollar. Canadians are working, business as usual. We will have retail sales data. And well, tomorrow we also should get a decreased volatility because of, well, always like that when you have a day off on Thursday. Most of the traders they take that also on Friday, and markets work normally, but we shouldn't expect any higher volatility. And we shouldn't obviously expect any higher volatility today. I think we got enough yesterday after the FOMC minutes. Okay, so let me analyze the charts right now. Now we'll start with euro dollar. Obviously, euro dollar is still under the, well, here the FOMC minutes came in line, the reaction after FOMC minutes came in line with the technical analysis, because technical analysis, since we broke the upper line of the flag, was pointing north. Why is that? Well, let me tell you about that again. So we do have this giant head and shoulder formation, breakout of the neckline, but that was a false breakout. Sellers didn't manage to hold the price below this line, and they came back. In the same time, well, that increased the momentum, that gave buyers momentum. So after breaking the neckline, they also broke the upper line of the flag, and the price went significantly higher. After that, the price made a smaller flag, which was also bullish, so it was promoting a bullish upswing. In the meantime, we got a false breakout here, false bearish breakout below 1.1730, this orange area. So that all together, so this flag, uptrend line, false breakout, come back above the horizontal support, created a strong positive sentiment. And yesterday we broke the upper line of the flag, which triggered a buy signal. Here is FOMC reaction, and then the price just went higher. And now look at that, we are below a very important horizontal resistance. It was with us as a support since the end of August. It was a support till the end of September, then a resistance. It was a resistance in the middle of November, and now we're about to test this as a resistance again. To this area we do have like 10-15 pips, so it's a great short-term buying opportunity. In the long term, for the buy signal, what we need to see is a breakout of the horizontal resistance here. So far it is, I would say it's a bit too early to say if we will have a breakout or not. But in overall, the long-term sentiment stays positive as long as we are above the black line here. Next one is very interesting, Australian dollar to American dollar. So the price used the uptrend line, long-term uptrend line, like a year-long, 2 years long uptrend line. Here it all started in January 2016. They used that line for a bounce. But also what we got is a correction equality pattern. Maybe you may see that, well, this movement was 615 pips. This one is a bit smaller because this movement is 590 pips. But come on, this difference is not big, it's not even 10%. So those corrections are almost the same. You need to always have a margin here, it's not a pharmacy. So buyers use the correction equality pattern and long-term uptrend line to perform a reversal. Obviously, they used also dovish FOMC minutes. But altogether, they created an inverse head and shoulder formation, then a breakout of the neckline. As you can see here, a breakout of the neckline, very technical comeback, test the neckline as a support. And now it was time to test the midterm downtrend line and the horizontal resistance of 38.2. That was a combination of a strong resistance here. But as you can see, buyers used the bounce from the neckline to push the price higher. And actually this breakout is very promising. Maybe there is no buy signal here yet. That's why I put this this sign above, because that's still resistance. For example, here, here. So I'd still wait for a buy signal, like for example, upswing, downswing, defense here, test as a closest support, and then large upswing. But potentially we do have a nice bullish setup here. Next one will be New Zealand dollar to American dollar. What we are having here is a breakout of the long-term downtrend line, then uptrend line, then test as a resistance, which was well, positive for sellers, so let's say negative. After that, the price made new yearly lows, so the sentiment is supposed to be very negative. Okay, but after the breakout of this horizontal support here, as you can see, that was a support from May, then from October. After the breakout, the price failed to keep below this resistance. They had a chance because the price created a flag. Flag was the trend continuation pattern, so it suggested us that we should use the upper line of the flag and break the lower line of the flag and go lower. But instead of that, instead of bouncing from the upper line of the flag, they broke that. Also, at the same time, they broke midterm downtrend line here, which was with us since 21st of September. So they broke that, and actually that triggers a buy signal. So we have a combination of few bullish factors. Even despite the fact that we are close to yearly lows, we still do see a few bullish factors here. First of all, breakout below horizontal support, and then a comeback, false breakout, then we do have a breakout of the midterm downtrend line, then we do have a denial of this flag. So that's potentially a good short-term buying opportunity. Next one is British pound to American dollar. Here we had triangle and a pennant. So here you have a long-term triangle, breakout of the upper line, tested as a support. That's a positive signal. And then we have had a short-term triangle, so more of a pennant, where we had a breakout of the upper line and a strong upswing. Now the price met first horizontal resistance here, so it's not a surprise. Maybe I will put it like there and there. So it's not a surprise that the price is heading higher. Currently, we met this resistance. We do have a small reversal, but we should eventually see a bullish continuation. Okay. Another one is Australian dollar to Canadian dollar, where we do have an interesting situation here. Long-term situation, because there is a long-term uptrend line here, breakout of the trend line, then a breakout of the horizontal support labeled with the orange color, and then a test of the support as a closest resistance. That should cause a reversal. That should cause a continuation here, so a bearish movement. But the thing is that in the same time, what we have here is a left shoulder head and right shoulder. So potentially we do have a reversal pattern. The thing is that, well, the price often does that. So what we have here is a pennant, but in the same time an inverse head and shoulder pattern. Price coming back here will be a positive sign. Price breaking the lower line of the triangle will be a negative sign. So here we just wait. Let me label a horizontal support here. Price not only below the lower line of the triangle, but below the horizontal support will be a sell signal. Price coming back above, but closing above those lines, because you can see 1, 2, 3 attempts and a false fake attempt. So I would like that. That would be a buy signal. So here we just wait. As long as we stay below the orange area, in the longer term, the sentiment is negative. Now WTI oil is trying to make new all-time highs. What is the high here? 58.05. Here is 58.05. So yes, we made the same levels. Sentiment is positive. We're telling you that here and here. So nothing changes on oil. Sentiment is positive. Maybe soon we will see like $60 per barrel. Next one, Australian dollar to Japanese yen. When the price was making this upswing, we were waiting for the price to get there, but we didn't get that. But still, I think it's not over yet. But first, let me start from the weekly chart. On the weekly chart, we do have a strong downtrend, then a correction, which is a wedge. And we already got a breakout of the lower line of the wedge, which is negative, right? So there is a long-term downtrend. But the thing is that the price probably would like to approach this resistance here to test it as a resistance, because they had no occasion to do that. First attempt was small, but now the price is kind of creating a double bottom formation. So what I would love to see is a price getting there, perform like a bearish price action, and then go significantly lower. That would be a perfect scenario. Maybe I will change this color not to confuse us. So the downtrend line, midterm downtrend line is blue, and my potential scenario for this instrument is black. American dollar to Danish krone. Well, beautiful. That was our setup for this week. A very good one. Look at that. Downswing since the beginning of the year, and a breakout of the long-term support which was with us from the beginning of 2015. After the breakout, it was the time to test this as a resistance here, and the test of the resistance was positive for sellers. Buyers had a chance to draw this inverse head and shoulder formation. It was beautiful, but they failed. They failed exactly on this resistance. So instead of inverse head and shoulder formation, what we got was a wedge. And we got a breakout of the lower line of the wedge here. After the breakout, we got a bearish formation, bearish correction as a flag. And as we marked, that breakout of the lower line of the flag triggered a sell signal. And that was it. That's it. That's a beautiful sell signal here on American dollar to Danish krone. And what we are expecting here is the price falling to 6.15. So quite a significant drop. An excellent trade in terms of the risk to reward ratio. Well, it was here, not here, because look at that. Opening here, you would have stop loss like 400 pips. You would get 1,600 pips, 4 to 1. That's a desirable risk to reward ratio. Now maybe we'll have a bounce. Why is that? Well, support, 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 resistance, 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 support, 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 support. Maybe, but we will see. I'm not gonna put it here. We will see. Gold is benefiting from the FOMC, from the weaker dollar. I don't like this situation on gold. I love gold, but the recent price swings are not very enjoyable. Like here, 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 here. Strong movements, directional movements, but in from both sides. So there is no clear trend. There is a sideways trend. We do not change much since the middle of October, so it's not my story here on gold. It's kind of a bullish pattern here, right? From this we can get an upswing. I'm not a fan of this pattern. I don't think it works very often, but I can spot it, so alright. New Zealand dollar to Singaporean dollar. I was waiting for the price to get there. The price was creating a pennant, but apparently it's not gonna be a pennant, but a symmetric triangle pattern which broke the upper line of this pennant, and a movement to this resistance here. So probably we'll have a test of this resistance, another one. But the sentiment is still negative. That's just one of the options. And for example, right, we do have this pennant, but maybe we'll have here a flag. So definitely, as long as we stay below the green area, the sentiment is still negative in the long term. It looks like that. Euro to Japanese yen, that was interesting because look, for since the middle of September, the price tested that support many times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, and didn't manage to break the support, to close a day below this area. But they did that yesterday, right? Which is supposed to trigger a strong sell signal. But so far so good. Maybe, well, the price is below, so there is still sell signal, but they are very close to deny this signal, and we have a chance that the price will break this resistance here, and that would be a false breakout, and that would cause an upswing, a massive upswing here. But as long as we stay below the green area, the sentiment is negative. American dollar to Polish zloty, well, that's also a beautiful formation, and also you can see this great similarity between American dollar and Danish krone, and American dollar and Polish zloty. So a huge downswing from the very beginning of the year, inverse head and shoulder formation, which failed, and the price created a wedge instead, breakout of the lower line of the wedge. After, maybe I will show you here. See, the similarity is absolutely amazing. H4, H4. After the wedge, the price went down, created a flag. After wedge, the price went down, created a flag, broke the lower line of the flag, and headed lower. And here on American dollar to Polish zloty, we should soon see the levels since the middle of September, so 351. Next one, American dollar to American dollar to Canadian dollar, also very good bearish setup. At some time I thought that it's gonna be a bullish setup here, but it was a false breakout, and now the price is heading much lower. So there was a strong downtrend. Well, downtrend, flag, downtrend, wedge. Failed inverse head and shoulder formation as well. So the price broke this lower line of the wedge. Well, first failed in a shorter term, failed to hold the price above the horizontal resistance. There was this inverse head and shoulder formation as well. There was this uptrend line, but they broke the uptrend line, denied the inverse head and shoulder formation, the price went lower, and now there's a strong sell signal on American dollar to Canadian dollar. Let me mark a few potential supports. Well, here is the one, here is the second one. So we are aiming at those levels, and next one is 23.6 here. S&P 500 was not very moved after FOMC. This movement is from today. That's FOMC, so not quite interesting. What we have here is the price still influenced by the inverse head and shoulder formation, breakout of the neckline, then breakout of the all-time highs, setting new all-time highs, even above psychological barrier of 2,600 points. And now we are currently seeing the flag formation. Flag formation is a bullish formation here in this case because it's after a bullish trend. So what we should see here is a breakout of the upper line of the flag. That's my scenario for S&P 500. American dollar to Singaporean dollar. That is interesting because yesterday we marked the scenario of the price correcting, and then a strong downswing. And that's our signal from yesterday that the price should go down, and the price did. That was a beautiful trade. Why? Because we had this breakout of the uptrend line here, then a horizontal formation, a rectangle, and we are waiting for either the breakout of the upper line or the breakout of the upper line. And that's perfect example how you should trade. You should be a trader, not an economist. Do you care much if you're not living in Singapore? Do you care if this pair will go up or down? No, you shouldn't care. You're a trader. You live somewhere else. You don't care. So you should be ready for the bullish scenario and bearish scenario. And inside of the rectangle, there is no point of guessing if the price will go up or down. You are just open for the trading opportunity. So you wait for the either breakout of the upper line of this formation or the lower line of this formation. In this case, price broke the lower line of this formation, which triggers the sell signal. And look, this sell signal was absolutely amazing. It was very strong, and we got 74 pips downswing, which for this pair is a lot. American dollar to Chinese yuan is having a beautiful breakout of the symmetric triangle pattern. Even if you use this line, that's not a problem. Here also technical analysis was in line with fundamentals, so FOMC helped the technical situation here. The price broke this uptrend line, and is now aiming closest horizontal support on 6.56. American dollar to Swedish krona, that's a power of the false breakout. Again, another example. So false breakout above the midterm downtrend line, false breakout above 38.2, and now we're having a reaction after that, a strong sell. Euro to Norwegian krone, still trying to defend this horizontal support here. As long as we stay below this support, the sentiment is still positive, but it does not look so good. Canadian dollar to Swiss franc, well, as long as we stay above the orange area, the sentiment is positive, but the thing is that the pressure on this level rises. There is still no sell signal. Sell signal will be created once the price will touch this line. Below recent lows, right? So far, so good, buyers can say. Maybe not the best, but still, as long as we stay above the orange area, the sentiment is positive. And DAX. Well, DAX is not having such a good time like American traders, but DAX is still defending crucial support on 12,920 points. It's with us since the beginning of October. As long as it is saved, as long as it works, the sentiment on DAX is still positive. Okay, thank you very much for attending our webinar, our daily analytical report. I hope you like those setups, and today we do have a lot of those setups thanks to FOMC, dovish FOMC, and weaker dollar. So it's a good time to trade for trend traders because they were waiting for some nice signals. Actually, I do have like 4 or 5 positions open because I'm a trend follower and I like to see new trends being born. And a price breaking from some horizontal patterns is a good sign for me, and that triggers sort of trading signals for me. Most of those positions are already on profit, even on the stop profit, so I don't have stop loss any longer there. I'm just protecting this with a stop profit order. Thanks very much. I will show you those trades tomorrow, so make sure you will attend my Trading Sniper, my daily analytical report tomorrow, and live trading session after daily analytical report, and I will show you everything. Thanks very much, guys. Now a short break, and after that a webinar about trading psychology. All the best.